Welcome to this podcast. This is Professor David Lopez. This podcast will cover important issues relating to financial planning and control, budget, operations and taxes, the use of technology in small businesses, as well as risk management concepts and strategies. Long-range planning is a critical component for any well-managed small business firm. Profit planning is a series of prescribed steps to be taken to ensure that a profit will be made in a small business. Benchmarking involves setting up standards and then measuring performance against those standards over the long term. An example of a current asset for a firm would be inventory. This is an asset that can be liquidated in a relatively short period of time. While an example of current liability would be accounts payable. These are bills that are paid to suppliers and vendors within a short period of time. An example of a fixed asset would be equipment. The balance sheet is a statement of a firm's assets, liabilities, and owner's equity at a specific given time. Small business owners receive income from profits in the form of an increase in their share of the business through an increase in retained earnings. The break-even point for any small business occurs when the volume of sales stimulates neither a profit nor a loss. An estimate of the amount a firm expects to sell during a given period of time in the future is referred to as a sales forecast. Control is the process of ensuring that organizational goals are achieved. Performance standards refer to the acceptable levels to which employee achievement should conform. One characteristic of an effective control system is that it should indicate a cause and effect relationship. The function of a cash flow budget is to forecast the amount of money needed to pay expenses and make other purchases. Another characteristic of a cash flow budget is it tells whether arrangements need to be made for borrowing or other owner investments. Financial auditing involves an outside certified public accountant or CPA who verifies the records and financial statements of a company, and this audit usually occurs once a year. A major characteristic of any financial audit is the use of that outside CPA. There are various ratios used to determine the health of a business. The current ratio shows how easily a company can pay its short-term obligations. The working capital ratio is the amount of current assets less current liabilities. Working capital indicates the ability that a company does have to pay its current liabilities. The function of a management information system is to collect, record, process reports, and converts the data into a usable form for the small business owner. An organized MIS is necessary for the efficient operation of any business, because information is a very important resource for all small businesses. Even the very smallest business needs a formal system for keeping records of transactions and other financial matters. Since there's a substantial cost to add technology, many small businesses use only the most basic forms of computerization. Many firms with today's technology utilize marketing by text because it is an extremely inexpensive form of marketing. Risk management is the process of conserving earning power as well as assets by minimizing the shock from losses. Pure risk is the uncertainty that some unpredictable event will result in a loss. One of the characteristics of a pure risk is the possibility of a loss that is present, but the possible extent of the loss is unknown. Speculative risk is the uncertainty that a voluntary, undertaken risk will result in a loss. Risk avoidance is the practice of refusing to undertake an activity when the risk seems too costly, while risk prevention refers to using various methods to reduce the possibility of a loss occurring in the first place. Risk transfer refers to shifting a risk to someone outside of the company. Insurance is an example of risk transfer. Risk assumption refers to setting aside funds to meet losses that are uncertain in size as well as frequency. Businesses use self-insurance primarily for risk assumption. An insurance policy can be additionally supplemented by an extended coverage endorsement, such as insurance against explosion, smoke damage, as well as windstorms. Most property insurance contracts have a co-insurance provision designed to ensure reimbursement for the full amount of covered losses. Most insurance policies can be additionally supplemented by an extended coverage endorsement as an additional insurance against such items as explosions, smoke damage, as well as windstorms. This has been Professor David Lopez. Thank you for listening.